This podcast channel is about you, successful international entrepreneurs, successful expats, successful investors. Sponsored by HTJ Tax.
So good afternoon, everyone. Welcome to another one of our tax talks at HTJ Tax. For those who have joined us before, good to see you again. For those who may be new, welcome. Of course, this is being recorded, and yep, it'll be recorded and it will be available on multiple podcast platforms like your iTunes, SoundCloud, stuff like that, as well as our website, htj.tax. And therefore, if you don't want to appear, just keep your cameras switched off. And okay, that's great. Thank you. And of course, nothing we say here should be construed as advice. We're having a general conversation about general principles. Consider it education, or if you want, even entertainment. You shouldn't take advice from someone who has not been legally engaged by yourself to provide that advice, and they know your situation inside out. So we're having a general conversation. Thank you for that. For those who provided some questions and comments in advance, thank you. I have them, and I will ask them in the order in which they were received. And for those who are joining now and wish to ask some questions, you can feel free to type in the chat box below if you're joining us on Zoom, if you're on Facebook, LinkedIn, one of the other platforms like YouTube, you can just type in the box below and I'll check every once in a while. So again, thank you and welcome. Allow me to introduce Professor Fabian Birnbaum. He is based in, where are you based? In Uruguay. Fantastic. So yes, we have the privilege and pleasure of having him guide us through a conversation on taxes in Latin America. Professor, would you like to introduce yourself?
Yeah, well, thank you very much for the invitation. It's a pleasure to be here. I'm a tax professor. I'm a chartered accountant in my country. I have a master in tax law in Uruguay, and also I did an LLM at the London School of Economics, and I work mainly in Uruguay and the rest of Latin America. So the idea with the invitation of Darren is to try to comment and to talk about the main tax issues in Latin America, so you can have a rough idea of what's going on here.
Fantastic. Thank you very much for that. So I know it is a huge topic and it's impossible to condense it, but can you just give us like an overview of what the tax landscape is like in Latin America?
Well, in first place, there are many countries in Latin America, and each country has different realities. So but we can say there are some general issues concerning the taxation of Latin America. In first place, and after COVID, most of the governments were seeking for new alternatives to try to raise revenue in different laws that were enacted. So we have seen in the last 1 year, 2 years, different ways that governments were trying to raise those taxes in order to try to spend more money to try to alleviate all the effects of the pandemic. So we have seen many taxes regarding mainly to wealth taxes. So either there were adjustment changes, increasing the rate, different ways that there were enacted in Latin America that were seeking to raise more revenue. Also, in the same moment, we have seen many incentives to try to attract investments in Latin America, because foreign direct investment in many of the Latin American countries, it's a key element for the economic growth. So at the same time that there were laws they were trying to raise more revenue, there were laws that they were giving exemptions and incentives in order to attract investors. So this is not a contradiction itself. It's what's going on. So it depends who are the some of the people that they were going to have more taxes and who is going to have the incentives. And also an important issue, of course, the pandemic has, and the COVID has a direct impact. And also an important issue that many Latin American countries were facing social and I would say democratic problems. And there were, for example, in the case of Colombia, that all the problems started with the tax reform when once it was announced a tax reform, because taxes in some way they are really connected to the public discussions and to all the different ways that the government have to interact with all the people. So this is something that we have been seeing in the last year.
Yeah, gotcha. Thanks for that. So you mentioned a wealth tax. Yeah, of course, that is quite contentious because in the U.S. it's been discussed in some places. But anyway, which countries we should be aware of that do have a wealth tax, and if you can give us an indication as to what thresholds would be, just generally speaking.
Well, for example, there were first in the last years there were amnesty programs and wealth taxes because they are really connected one with the other. But for example, in Argentina, there was a wealth tax, and then there was like they call an emergency tax. In general, the rates are quite low, 1–2%. They are not so big. But sometimes current rates of the investments are not so high. So a rate of 2% over the wealth tax sometimes is higher than the rate that they may gain in the investment, in the financial investments, or etc. So, for example, Colombia has, Chile has, Peru also has the same problem. Argentina, as I mentioned. In Brazil, they were discussing that. Mexico as well. So there are many countries that they were discussing this type of measures in order to try to, as I said before, in order to try to raise more revenue to solve all the problems of the pandemic.
Okay, understood. Now, going in the opposite direction, I know that people from the U.S. and Canada, they are drawn to jurisdictions where they can have an opportunity to save on taxes if possible. So which jurisdictions are known for like having a territorial tax system where only taxes are paid on income that arises from within the country, and income that is generated outside tends to be left alone?
Well, I would say that the main countries that are that has a source principle or territorial principle are, in first place, Uruguay, Panama, and Costa Rica. Those are the main countries that they have those type of criteria. Of course, in first place, Costa Rica, for example, is showing the OECD 2 years ago, so they might change that principle. And now with all the discussion of the global tax to the multinational, this principle is being discussed whether it should be modified or not. So 30 years ago, all the Latin American countries had source principle. In the last 30 years, they were changed to the residence principle. But I would say the only 3 countries are Uruguay, Panama, and Costa Rica that still remain the source principle.
I know Panama has a reputation for being a tax haven. In your opinion, is it really a tax haven? And otherwise, which other countries you think are attractive from a tax perspective, like Panama?
Well, in general, I mean, there are many British Virgin Islands, those Cayman, those are located within America, but I would say the bigger countries, the most important countries that they were named and also shamed as tax havens are Panama and Uruguay. Both countries made all the changes in order to try not to be within that definition. But as many people will know, such definition is not fixed. It changed, and it's different from different countries or organizations. So at the end of the day, both countries made lots of changes in their regulations in order to comply with all the international tax standards and also with the anti-money laundering rules. So they have the reputation of being tax havens. However, they did most of the changes in order to be compliant with the international rules.
Okay, that's fair enough. So let's, I guess it's hard to talk about like Panama without mentioning the various leaks of confidential data. Most recently the Pandora Papers. Well, what is your perspective on that?
Well, this is a personal opinion. I mean, the problem is not information. My first question is how many judiciary problems there were after Panama Papers? How many illegalities they were discovered after Panama Papers? Few. So they release millions of information in order to get few judiciary problems. I believe that confidentiality and privacy they should be respected. So this is something that we should work together: privacy and with the compliance of the rules, with the compliance of an anti-money laundering rules and tax evasion. So my perspective is that this is, I would say that they have, there are many political issues behind those information. There were not so many problems. So at the end of the day, it was just news, big news, but few judiciary problems. That's my view on this. So what I hope is that they will respect the privacy of people and the confidentiality, because those are rights that they should be respected, but in jointly with the respect of the international rules. So we need to find an equilibrium on those issues.
Okay, understood. And to a large extent, it was, especially the most recent one, the Pandora Papers, they were quite sensationalist, but there was relatively few cases of actual wrongdoing or illegality. Yeah. It seems to be more an issue of morality. What should have happened.
I would say I totally agree. Morality and scapegoat. I mean, at the end of the day, governments need to point who is the person that in order to be the scapegoat. So there is morality issues and scapegoat and political issues. So this is I cannot say this is a white or black issue. So it's in the middle. It's not so clear.
Understood. So, given the evolving tax landscape, we've seen jurisdictions, if we stick with the Americas, like you mentioned the Caribbean islands, and one that's become quite an interesting case study recently has been Barbados, right? Like Bermuda and some other jurisdictions, they have introduced like a remote worker type of visa, something that allows someone to come into the country and have an extended stay. But most interestingly, someone can stay for a year in the first instance and work and not be subject to any taxes. It's a bit of a carve out. And I guess in Europe, there are some jurisdictions that have interesting carve-outs. So, for example, the non-habitual residents in Portugal, the Beckham law in Spain, res non-dom Ireland in the UK. There's something similar in Belgium and Italy. Are you seeing any interesting carve-outs like that on mainland Latin America that will make it interesting for remote workers or for entrepreneurs?
Yeah, I would say that the only country, I would say Panama and Uruguay, and mainly Uruguay. Let's try to, Uruguay and Argentina are like Germany and Switzerland. Switzerland is Uruguay and Germany is Argentina. The type of relationship, all the countries are big, there are big difference between them, but their relationship. So, for example, in Uruguay, we receive lots of Argentinians for many reasons, economic reasons, because they don't want to stay in Argentina due to taxes, due to different political differences, and they are coming to Uruguay. So, and Uruguay has, I would say, big incentives to try to attract people to live here. Those incentives are an exemption, a tax holiday of 10 years of any offshore income that the person might obtain. So it's a huge benefit, and I'm not aware that there is any regime like that in a Latin American country. I am aware that Europe, they compete on the attraction of individuals, but this is not the case of Latin America. But I would say that Uruguay is the country that competes on that and try to attract mainly Argentinians due to the proximity between both countries, to try to attract them to live in Uruguay, and that's why there are so many incentives, 10 years tax holidays for those that come here.
Okay, that is very interesting, and especially for people who are at the earlier phase or the growth phase of whatever they're doing, having that opportunity to save on taxes allows them to reinvest that into the company and perhaps accelerate their growth. So that is quite attractive. But what about on the other side of the spectrum with retirees? I'm aware that there's some jurisdictions in Europe that make pension income, they give them preferential tax treatment as an incentive to bring retirees in. Is there anything similar to that in Latin America?
No. As far as from the case I mentioned from Uruguay, there are no cases like that. So there is no such tax competition on individuals like there is in Europe, in Latin America. The only country, I would say that also Panama gives some tax incentives, but except from Uruguay and in some case Panama, the rest of the country, there is no that competition on the individual.
Okay, understood. Someone just asked a question. They are, I'm assuming they're an American citizen. Yeah, they're a U.S. citizen, and they are living in Colombia. And so they're Colombian tax resident, and they have a company in the U.S. that they're going to sell. And the person is asking, generally speaking, because of course we can't give advice, but generally speaking, would the sale of a foreign company by someone who's Colombian tax resident be subject to taxes in Colombia?
Yeah, and also there was a tax reform recently enacted in Colombia, and one of the main issues was targeted on this type of transaction. So potentially, yes, I would say that, and this is something that was targeted on a recent tax reform. The tax reform has few months, so this is something that the person should be aware of analyzing any tax consequence.
Okay, yeah, absolutely. So be subject to taxes potentially, probably in Colombia. And of course, because they are a Colombian tax resident, when they're doing their U.S. taxes, because they're still a U.S. person as a citizen living outside, they would get a credit for taxes already paid in Colombia in the Form 1116. So
yeah, that happens a lot. with the US, because the US still tax people that has the nationality there, and in contrast with the rest of the Latin American countries that tax residents. So any US national that live and resides in a Latin American country, probably they will need to comply with both jurisdictions, with the Colombia, as an example, and the US. And in some cases, there is no tax treaty between those countries. So yes, this is something that we see a lot.
Okay, understand. And keeping on that theme of people with businesses online, and particularly those who are selling physical products online. I know in the EU, it becomes a bit complex in terms of the VAT regime, and of course, sales and use tax in the US. I mean, there are 50 states, but there are like 13,000 sales and use tax jurisdictions in the US. What about someone who's doing some sort of e-commerce in Latin America? How is the landscape there, and how do they best navigate that?
Well, any person that wants to do e-commerce in Latin America, first they need to breathe, because there are a lot of complexities. So if they're not breathe a lot, they cannot. I mean, now speak. There are many changes on that direction in most of the countries. In first place, there is no coordinations between the Latin American countries. So each country has their own rules. So for example, we have been seeing changes right now in Mexico. There were changes in Uruguay, Argentina, in Chile, in Peru as well. In Colombia, there were changes. And all those changes were completely different. In some cases, it is widely used, the white holding agent. So mainly the credit cards need to white hold a specific amount, and they will pay on behalf of the e-commerce company. This is something that it could be seen in both taxes, income tax and VAT. So there are changes depending on if it is a B2B business, a B2C business, if it's a digital business, if it's an Uber business. I refer to Uber to those who connects to people or to businesses. As far as I know, there are some jurisdictions, like for example, in some cases in Argentina and also in Uruguay, that the e-commerce need to register on the tax authority and do the tax returns itself. So there were many changes on that. There is no coordination on those rules, and each country has their own rules. And there, of course, there are lots of gray areas, because all these rules are quite new. There are few background doctrine and judiciary judgments.
Understood. And so in each jurisdiction, one would need to register and plan for not just direct taxes, but the sales taxes or the indirect taxes as well. They'll have to navigate jurisdiction by jurisdiction. What about digital products, or someone who's offering SaaS, like software as a service? I know it's becoming, at first you would fly under the radar, but now increasingly it's being taxed. How is it in Latin America?
Well, the same happens. I mean, some of the like software might, in some cases, it was taxed before all the digital taxation that was enacted in the last 2-3 years. In most of the cases, it is taxed through white holding. Either the business company that pays the software, or the credit card that. So it depends mainly of the type of business. If it's a B2B business, probably the local business will need to white hold the tax. And if it's a B2C, the problem is how the foreign company could comply. And in some cases, it was exempted. And in other cases, it was mandatory to the foreign company to register in the local authority. And in some other cases, the banks or the credit cards were appointed as white holding agents. So there were many many different situations depending on of each country.
Interesting. And what about services? Like if you are, for example, a tax consultant and you're serving clients who are based in those jurisdictions, are there any tax implications in Latin America?
Yeah, in most of the cases there are withholding taxes on technical services. This is quite common to see on the different countries. Of course, I assume that there are also PE rules that it might be triggered depending if the person goes to their country and lives there. In general, it is more than 6 months. But there are, I would say, most of the countries they have withholding taxes on technical services, and those rates can vary from 15 to 35%.
Right. So just to be clear, even if the service provided does not have PE in Colombia, it would, so the client will still need to withhold and remit. Okay.
Yeah.
Wow. That is pretty aggressive. Wow.
Yeah.
Understand. Okay.
Yeah. I would say that most of the Latin American countries have withholding taxes on that.
Okay. And what about, generally speaking, like digital service taxes, like a Netflix tax, same principle?
Well, those taxes were enacted in the last 2-3 years. But I would say that right now, I would say, let's say Netflix is widely taxed in Latin America. In both VAT and income tax.
Right. Okay. And so, you know, it's being rolled out. So digital services taxes, they're being rolled out. So just a matter of time before everyone is on board with it, basically.
Yeah, exactly.
Okay. Interesting. So what about incentive to foreign companies? There are jurisdictions, for example, like Singapore, where I'm based. I've been based since 2013. If you have a startup, you get certain tax breaks, and depending on how many locals you hire, you may get incentives on some, maybe even access to government funding. Are there any governments or jurisdictions in Latin America that offer that?
Well, there are some that are famous for that. I would say the most famous are Colombia and Uruguay for giving tax incentives. Both countries have free trade zones that are really important in order to setting up companies and export to the rest of the world. But most of the countries, they have different, I wouldn't say that they have wide incentives. They have specific incentive on certain industries on type of services, let's say software or certain time. For example, and right now there is Mexico enacted, approved a new tax reform, and there were certain rules in order to try to promote this type of investments. Most of the country have, and also be aware that there are some countries like Brazil or Argentina that they have state law taxes. So each state has their own tax and their own incentives. So it's not the same. Let's say in Argentina, it's not the same to set up a company or something in Buenos Aires or in Tierra del Fuego, that's in the south. So this might differ. So the possibilities are quite big because you have differences on each country at the federal level, to say in a US way, and also different state law taxes in some cases.
Okay, that's interesting. So it seems as if both Uruguay and obviously Panama are standouts when it comes to, just in terms of tax efficiency. But what about ease of doing business, like the ease of incorporating a company and dealing with government agencies? Would it be those two jurisdictions that stand out as well?
No, I would say that the first one is Chile.
Chile.
Let's remind that Chile is at the OECD. So in general, they lead those rankings.
Okay. So in terms of ease of doing business, it'd be Chile, but it won't be as tax efficient as, say, Uruguay or Panama. Is that a fair statement?
but this is there is an economics explanation to that. Uruguay and Panama are small countries, so they need to give tax incentives in order to attract big investments. That's the main explanation.
And I understand that the tech ecosystem in Chile is quite developed as well. There's a lot of, in terms of not just startup activity, but in terms of funding, VCs are quite active and so on. Yeah, fair statement.
Yeah, I mean, Chile has many treaty agreements, tax agreements with many countries in the world. They are used to trade with many countries. So I would say that they are the most developed country in that way in Latin America.
Gotcha. And then on the flip side will be a jurisdiction like Brazil. I understand it is quite complex.
Argentina.
Both neck and neck. Because I've heard people comment that the tax code in Brazil is probably even more complex than the US. So you think that they both, Brazil and Argentina, are same?
Yeah, I would say that both have federal taxes and state taxes. So you have that complexity, and I would say that they are the most complex countries in terms of taxes.
Okay, understood. And what are your thoughts on Pillar 2?
Well, yeah, I mean, in first place, most of the Latin American countries, they agreed on that, but they agreed because they didn't have other alternative. So they were invited or obliged to go to that Pillar 2. I believe that if they want to change, I'm quite skeptic on the tax cooperation between countries. I do believe that countries compete between them, and this has been the rule in the last 50 years. So I don't know if this might work or not, but this is quite difficult for Latin American countries because they do rely on tax incentives. They do rely on giving incentives on foreign direct investment. They rely on the country where that exports and not the country that consumes the business. So there is a change of criteria how to tax. So, I mean, I believe that there are many challenges to the Latin American countries, and they are most obliged to join the OECD agreement because they don't have other alternative. But their needs and their requests, etc., are not taken into consideration. This change was led by the most developed countries, and they are seeking for taxing some more revenue. I'm not saying if this is good or bad. I'm just saying why this was agreed. So in all this agreement, developing countries, like most of the Latin American countries, are not taken into consideration. So probably there might be some big challenges on all the Latin American countries on how to be part of Pillar 1 or 2 and this new tax world.
Right, understood. And I'm just kind of stepping back. There's a perspective that in terms of the whole offshore world, it evolves, which is what one expects. Nothing stays the same, but it's even jurisdictions that are popular like the BVI and the Cayman, they're being used less than they have been historically, as I guess offshore is evolving into like more nearshore. So like, for example, there are certain states within the US or even states like or jurisdictions like Singapore where it's not exactly tax-free, it's taxed. But so there's a shift away from like the Panamas and the Cayman Islands. That's a perspective. What are your thoughts on the whole offshore world? Do you see it evolving, or do you see like the Panamas having a strong future ahead?
Also, let's take the example of BVI or Cayman. They were enacting many laws in the last years. They were evolving.
Right.
And probably they will need to evolve more. And they be to try to, as all the Latin American countries, they will be to be more aligned with international regulations. I understand they will exist and they will be used as an offshore entity, but they will need to change their laws in line with all the changes in the international tax arena.
Right, which I guess, okay, so for Latin America, or like in Asia, if you're in like Hong Kong or Labuan in Malaysia, they were to a large extent the offshore jurisdiction of choice for, let's say, businesses or persons in China. And similarly, if like Panama or certain Caribbean islands, they may be more in tune with the offshore needs of the United States and Canada, right? So with what I'm thinking and what I'm asking you is whether, given the rising popularity of like South Dakota and Wyoming and certain the structures that are available within the US, does that come at the expense of Latin America, at least in terms of the offshore world?
This might happen, probably. I mean, most of the offshore world also is located in the OECD countries.
Yes.
So at the end of the day, it's a matter of economic and tax competition. I do not believe that also the OECD, it's not they do not cover all the world, and they don't have global perspective. They have certain perspective of some countries, and those countries they are seeking for their own interest. They protect their own national interest. So I believe that we will see more tax competition. It will change the tax competition. It will change all the landscape and context of the international tax arena, but there will be tax competition because countries want to attract investments on their own country. I mean, they don't look for global interest. This is my view on this, and I'm sure this will happen.
Okay. And what about the opposite? Because my understanding is that some Latin American countries themselves have a blacklist.
Yes,
right? So it's not just the OECD, but yeah.
Well, in some cases they have blacklist, like they name the countries that they are blacklisted. And in some cases they have criteria to say if one country is regarded as tax haven. But you might see rules on that. And for example, tax havens for certain countries might be subject to a higher withholding tax, or they will be subject to transfer pricing rules, etc. But these rules, I would say that they were enacted after 2008, after I would say the crisis of the transparency. After 2008, all the world moved towards transparency, and after that, many Latin American countries issue lists or criteria to consider certain jurisdictions as tax havens, and there were some kind of sanctions on those jurisdictions. And they are all still in force.
Right, and like different Latin American countries have different countries on their own blacklist, but like, is there any common jurisdictions that will be popping up on Brazil and Argentina and okay, no, everyone's doing their own thing.
And they were modified all jurisdictions. Panama, in some cases, it was regarded as a tax haven for many countries, but then it changed. And in some cases, it's not the country; it's certain types of regime of certain countries. So
right.
it's quite complex to state which are the tax havens for the Latin American perspective.
Okay, understood. And do most jurisdictions have CFC rules, control foreign
Yes.
corp rules?
Yeah,
Yeah.
they do have.
Mm. Is there any jurisdiction that stands out as being more aggressive than others in terms of their CFC rules?
It depends, but they have. I would say that Argentina was one of the countries that was targeting this type of rules and targeting wealthy individuals. I would say that this is the country that enact more rules in order and anti-avoidance rules. Also Mexico right now, in order to try to tackle tax evasion in the wealthy individuals.
Okay. And is there like a movement towards like public registries? Like where you can just go online and see, well, who are the shareholders in this company? Who are the UBOs and beneficial owners? No?
Not right now. There is more public information, but not regarding shareholders. Most of the shareholders need to be communicate to certain entities, but that information is private.
Okay, understood. And what about asset protection? Like, obviously in our common law jurisdictions, you know, a trust is quite an effective and commonly used tool. Are foundations popular in terms of asset protection?
There are most of the foundation, for example, in Panama, are quite popular. It changes all over it depends on each country how they tax them and how they consider the foundations in Panama, or for example, the trust in the US, or there were quite famous the trust in New Zealand, for example. But right now, I would say that the US, because it's outside the scope of the CRS rules, so probably, and since the trustee need to inform, many trusts move towards the US, and there they use Delaware, Wyoming, those states.
That's interesting. So, so I have some clients most of my clients in common law jurisdictions, but I do have a few in civil law jurisdictions like Indonesia or France, and their perspective that in those jurisdictions, they more or less see through the trust arrangement in Indonesia as if they just don't recognize it at all. But you're saying that generally speaking, of course, in Latin America, even though they won't recognize a trust within their borders, aside from, let's say, Panama, if a tax resident does have a trust in another jurisdiction, it won't be treated as transparent. There aren't any.
Well, let's say, for example, the case of the US, of Argentina, sorry.
Yeah.
It depends of the type of trust and the regulation of the trust. But in some cases, yes, it was appointed the settlor, if there was no current beneficiary, to be the tax agent or obliged to pay the taxes. And there, for example, in Argentina, there were many changes on that, on trying to, because it was widely used, the trust, in order to protect the assets and to defer the taxation. So there were rules trying to tax the settlor instead of the beneficiary. So there are countries, and there were many changes on that direction, trying to tax the settlor instead of the beneficiary.
Okay, right. So in other words, that body of tax law isn't very well developed yet, generally speaking. It's evolving to be more aggressive when it comes to trust.
Yeah, it's evolving jointly with the wealth taxes. Because before the importance of the wealth taxes, those anti-avoidance measures, they were not so important. Once there was an amnesty program, once there was wealth tax in Latin American countries, these type of measures, they were taking more relevance, and that's why there were many changes on that direction. In general, trying to tax the settler instead of waiting the beneficiary to have the assets.
Mm-hmm. All right. Another trend that we see in common law jurisdictions outside of the U.S. So I'm thinking of like Canada, the U.K., Australia, New Zealand. There's, I mean, traditionally, like tax residence was defined in terms of like a day's test, right? 183 days, or but now there's a move towards like center of life tests. And even when someone can be outside of Canada or Australia for maybe 1, 2, 3 years, they're just moving around or whatever, there are certain conditions where some fallback rules would apply, and they're still deemed to be tax residents of Canada or Australia, even though they're physically not there, because of certain situations, like they may not be tax resident somewhere else. They're not a bona fide resident of another jurisdiction. They're just kind of moving around. So therefore, some fallback rules apply. Do you see any similar trends in Latin America?
Not in all the Latin American countries, because in first place, most of the countries do not compete on the attracting individuals. So these type of measures are not so relevant. But in Argentina, for example, that there are many Argentinians leaving to Uruguay, there were some measures like that. So because taking the Uruguayan residents was quite straightforward, but trying to be out of the or not to be a tax resident in Argentina was quite difficult. So there were many measures and rules in Argentina regarding this. So for example, if you have your social security in Argentina or your medical expenses there, it was difficult to live as a fiscal resident there.
Okay, understood. And last but not least, what about crypto? Like, generally speaking, how is crypto viewed across Latin America?
Nobody knows. That's the truth.
Yeah.
I would say that there are starting to be some administrative rulings, but still there is no regulation on that. I think it is starting to be on the focus, but there is no good regulation on that. It is quite difficult to assess what is a cryptocurrency, if it's a currency, if it's an asset, etc., how it should be taxed, the sale, the gain, etc. So it is not so widely regulated in Latin America yet.
So for the most part, it'd be treated like property then?
In general, what they have seen is that it is considered as an intangible asset instead of a currency.
Right. Okay. But I understand that there are maybe certain jurisdictions in Central America that are embracing digital currencies.
El Salvador, mainly.
El Salvador, yeah. Okay.
Salvador. I think it's the only one, but yeah.
That's the only one. So if I were, like really big into crypto, and I wanted to move to Latin America, I'd probably want to stick to Uruguay and Panama. Is that fair?
Yeah, it could be in order to try to protect from the source principle. It might protect all your cryptocurrency gain, but still, this is just starting.
Right. And do you see a trend? I mean, is it just El Salvador, or do you see other governments considering moving towards that CBDC, central bank digital currencies?
No, I don't think so. I mean, many countries rely on the monetary measures in order to try to get the benefits or to try to reach certain incentives in the country. So I do not believe they will rely on a decentralized currency. That is my opinion in the short term.
Okay, understood. All right, that's great. I'm what I'm going to do is let me just have a look on the other platforms like Facebook and see if anybody has any questions there. Nope, there's nothing there. Any questions on LinkedIn? Nope, I don't see any. So yeah, thank you for sharing some of your insights on what is a quick but comprehensive overview of the Latin American landscape. I know there's some, I've seen some of your questions and comments, like Aaron, and I think it'll be, as I mentioned, you probably want to seek an advisor who's both US and in your case, Colombia qualified. Definitely, you're correct. If you're a U.S. person, and I think Professor mentioned that as well, once you're a U.S. person, whether it be a green card holder or U.S. citizen, no matter how long you spend outside in whatever Latin American country you're in, you will be subject to taxes by both the jurisdiction in which you reside and the U.S. So you need to be doing returns for both. As to who gets first bite of the cherry, well, it depends on the source of the income, as well as maybe there's a treaty in play and the structure that by which you hold the asset or enjoy the flow of income or capital gains or whatever it may be. So it really depends, and you probably need to sit with a team that understands international tax to take a deeper dive into situations like that. But if someone wanted to reach out to you, Professor, what's the best way to find you? What are your online credentials? Where do they find you?
Well, I think that you post my LinkedIn. You can contact me there, or you can contact through my email that it's FBIRNBAUM@fbm.tax. So I will be pleased to receive any email from
and
whoever needs to contact me.
So fbm.tax, is that your domain? Is that your entity?
Yeah.
Okay, so fbm.tax. So anyone wants to reach out to Professor, he's available. You can reach him on LinkedIn. He just gave his email address, and you can get him at fbm.tax as well. Thank you very much, Professor, and thank you for those who have been joining us on the various platforms. And do have a look at HTJ.tax because we do this every week. Professor, thank you very much for your time, and we'll see you next time. Bye-bye.
Thank you for the invitation. Bye to everyone.
Okay. Here are 4 ways we can help you. Number 1. Sign up for free webinars on U.S. expat taxes and international entrepreneur taxes at www.htj.tax. Number 2. Stream premium educational videos at www.htj.tax. Number 3. Contact us for tax optimization consult over Zoom. Number 4. High net worth. We can quote for doing your U.S. international taxes returns. Our books and upcoming event are available at htj.tax. Please subscribe, like, share, and comment below. Email us at help@htj.tax to engage us, to advise on international tax or business matters.